Sudeep Bandyopadhyay, the group chairman of IndiTrade Capital, is now with us on the show. Sudeep, what have you made of this weakness that we've seen over the last 2 days?
Well, I think, market did go up quite a bit. And after that, a little bit of consolidation is par for the course. Remember, the geopolitical environment hasn't really drastically improved as far as the world macros are concerned. The resurgence of COVID in China has also created some confusion amongst the investors and has affected a lot of categories of stocks. So overall, I think a bit of caution, bit of profit taking, bit of consolidation, I think is a combination of all that. And of course, add to that the year-end factor where the interest in trading amongst global investors anyway reduces. So I won't read too much into this correction. And I will not really get into a pessimistic scenario thinking that markets have started correcting in a big way. I think I will put it to predominantly year-end phenomenon. Today's Indian market reaction, in spite of US market having moved up, Asian markets, most of the Asian markets showing green, I think is an overreaction on the COVID front based on what the government meetings and things like that. But by and large, the opinion coming, and even in your channel, categorically the experts told that there is absolutely nothing to be afraid of or change as things stand today. So I won't really panic with this selling. I will rather look at buying into some of the stocks, getting this opportunity.
So let's talk about those buying opportunities itself. Sudeep, what are you looking at? What sectors, and if you can, specific stocks?
Mangalam, I think one of the stocks you just discussed 5 minutes back, IRB, I have been talking about this stock for some time. And I think, infrastructure, construction, these are certain stocks which we should definitely look at. The private capex has picked up. The government spending, both state as well as central, is bound to pick up even further from here. So this entire space, whether it's cap goods, infra, construction, building material, is expected to do well for the next 1.5 years, at least till the next general elections. And some of the construction companies who have cleaned up their balance sheet, who have hived off the major assets like the road assets, which IRB has done through an investment in it. So IRB is a clean company, pure focused on construction, solid order book, execution is improving. So some of the companies like this needs to be definitely looked at. I would also recommend buying into L&T. We believe that there is a long way to go from here. There has been a bit of correction in L&T prices. That's a great opportunity to buy L&T and hold for a long term.
Right, hold for the long term. By the way, IRB is about to, it already did, but not quite convincingly. I think, it's flat today. For the month, it's up some 6%. But basically, what I'm pointing to is the fact that it's it's in almost uncharted territory. The earlier high was in 2010. It spent some time around these levels in 2015, then 2018. It's back at those levels, basically. So let's see. I'm talking about a slightly longer time frame. Sudeep, we were just talking, we had Weber Sangvi, we have vendors, and we were talking about the budget is a month away, right? And I think there will be, once this end of the year and the start of the new year, or as we get past all of that, it'll be setting sights on the budget. And markets do kind of treat that still as an important event, at least for sectors, etc. Anything comes to mind in terms of what could be potentially important, what to keep an eye out on, any setups, any trades with the budget in view?
Well, Prashant, a couple of things. One is we just talked about infrastructure construction. I think we will see some action, some announcements in that particular space. Also, remember, probably this is the last full budget before the next general elections. So it is expected to have some infrastructure and construction related announcements. The public spending on infrastructure is not yet adequate, and we expect quite a lot of pickup from here on. The other sector where we have been positive and we think there should be some announcements in the budget is the fertilizer sector. We have seen some excitement in the fertilizer stocks due to multiple announcements or expectations of announcement. But some of these structural changes which we have been talking about, the government has been talking about, the industry has been talking about, hasn't really taken place. And fertilizer subsidy, even today, constitutes a significant part of the residual subsidy burden which the government bears. So the streamlining of this subsidy even further from here on should definitely benefit the sector. To an extent that has happened, but a significant part is still left out. So we will watch out for that. The last part of the budget, which I'll be looking out for, is concrete disinvestment targets. Unfortunately, this is one area where the government hasn't been able to progress in spite of the best wishes and really come out with a thumping success. This is one area where we will expect at least certain streamlining so that some of the disinvestment which the government has been talking about for a very long time does happen. And that should also create some excitement in the market.
By the way, just on that subject of infrastructure, there is a Nuvama report which came out, I think, yesterday or today, where they're saying